Hey everyone, good afternoon. My name is Edwin Rivera with the Millennial Realtors. Before anything, thank you so much for connecting today, either via Facebook, Instagram, or YouTube. But today we have a guest speaker. This gentleman right here, Cesar, he have saved so many of our clients from almost losing of not buying a house. So I wanted to bring her to today's show so he can give us tips on how to be able to have a more healthy credit score so that way it doesn't affect you when you want to buy your first home or you want to buy your second investment property as well. Hey, sister, how you doing? Can you hear
Could you
me?
hear me?
Perfect. I can hear really good.
Okay, perfect. I was just trying to make sure that you were able to hear me, but definitely thank you so much for the. It was cutting off, so I only heard the end. But I want to say thank you. I'm very grateful to be here. And definitely looking forward to see how we could add value to everybody that's watching and listening to us today.
So yes. So now I was telling everyone that I will say you are a hero or you save a lot of our clients in many cases because, roughly 34% of applications that get declined for buying a house is because of credit. And I will call you a credit professional that help many families. Today, we're closing one purchase of one of our clients that because of the credit, we're not able to purchase and your company was able to help them to fix the credit, rebuild the credit, and now they gonna become homeowners to specifically today because of your help as well.
One of the things I first off I want to say, that's the reason I got into this industry, to be able to help, not just of course, to create revenue, but to solve a problem that really exists and that nobody was taking it serious. One of the things that for me was to make sure that before i I got into the industry, that I realized what people were doing out there. And I want to kind of backtrack why we're able to create the results. Because what I did, I took a step back and I realized what everybody else was doing. And I saw their mistakes and I fixed them. And that's why we've been able to fine tune, and mind you, right now there's such more system we've created on the digital side, that you're going to see even more progress with your clients, actually, which is exciting to see here, that your clients in escrow today. And I know I've been working with your team and yourself, putting, getting these clients from, I mean, scores that, if we would look at those scores, you would think that they'll never be able to buy a home just because of where they're at. And we've been able to help them and guide them, and not only just repair their credit, but be able to offer tools that they need to reestablish the credit. And I think that's also very important. One of the things that I do with, I've done it with your team, and I've done it with, other people that we work with, is not only do I want to fix their credit, but I want them to understand what works to sustain and keep their credit going strong. And I think that's another valuable thing that we add. When I see the clients that go into escrow, hearing right now what you just told me, for me, is exciting, because that's why we do what we do, to be able to help people do the things they couldn't do when they had the bad credit. Yeah.
Exactly. Give me 1 second.
Sure.
So yeah, so thanks to your help, we were able to help. Yeah, like I mentioned before, a lot of families they want to buy a house, and life
Mhm.
happen. Life happen throughout the time. Sometimes you can have a rough time that you don't make payments. Recently, almost 5 years ago, a lot of people were not working, having the same income, and a lot of people stop making payments, have collection, etc. And they think that cannot be fixed, and you're able to fix those items for those clients, so that way they're able to technically, to me, credit is if you have a good credit, many doors and naturally doors are open for you, not only for houses, but also like car payments, credit cards, loans, anything that you need. You have more access to money when you have a better credit. And it's like a car, every now and then you need a good tune up on your car so that to make sure that everything is running as smooth as possible. Okay.
Correct.
Now, first question that I have for you is what are the things that usually affect the most on people's credit in general?
The number one thing we see most, most common thing is late payments and collections. That's kind of the two things that most people have, and sometimes the late payments are actually not done purposely. They have auto pay on their bills, and their debit card expires, and they don't realize it, and they don't change it. And I had a lot of scenarios where people don't realize it until they get the letter in the mail that they're going to go into collections and they're 90 days late. That's a huge thing we see a lot. And it's unfortunate because it's not the client's fault, and they'll call the bank and tell them like the money was in the account, and the banks don't care, so they still put the ding on their credit. Another thing, collections are things, sometimes people do, like you were saying earlier. Right now, 80% of the collections we're seeing on credit reports are from the pandemic. It's when people stop paying, so it's actually a huge amount of collections from that time. Because people, got laid off or stopped working, and they were depending on their income, and then all of a sudden they can't go to work. So definitely there's a lot of those are the two main things we see on credit. And the thing is, I always tell people this, don't feel bad that if you did have a hard time and your credit's not where you want it to be. It's okay, because nobody educated us on credit. Nobody taught us how credit works. Nobody taught us that there's different ways of I call it a game. It's actually a game. You just got to know how to play it, and you can't be scared of playing it, because everything has a solution. Everything. Yeah.
Everything.
So those are the two
And
main things. That's a great question.
okay, and also you mentioned collections. Even though you have a collection from the past, and for the last 2 years you've been making the payments on time, that still will pull you down. The way I see it is like I'm trying to swing to the top, but you still have something bring you down, and that's the collection. So you have to make sure you remove any past weight that is not helping you right now in order to have a healthy credit at this moment. And even though you have a good credit, you don't have a collections at this moment. And let's say you have a decent FICO score, 620, 640. Uh, the better credit score you have is the best opportunity to have a lower rate. Because one of the things, a lot of people, when you're buying a house, a lot of people say, oh, I have a okay credit, I'm gonna qualify for a loan. Yes, you might be able to qualify for the loan, but keep in mind, when you're buying a house, the income will dictate how much you're going to be able to purchase. What is the purchase price? That's the income exactly for. The credit score is going to tell the bank, is this person a high risk or low risk? Meaning, if you have a kind of low FICO score, they're going to give you a higher rate. If you have a good FICO score, 740 or more, trust me, you're going to get one of the lowest rate in today's market. So if you want to save money, make sure your credit is in good standing position. Okay. And don't wait
Yep.
until you're ready to buy a house. We do a lot of consultations, a lot of strategies for our clients, and one of the things is credit. Make sure that the credit is healthy. If they want to buy a home in the next 2, 3 months, we can tell them, hey, you need to do this, or you can contact Caesar right now so they can help you right away with, to clean up the credit. But make sure your credit is in good standing position when you're ready to open escrow so you can save money and be able to get a lower rate. That means it's going to be a lower payment every single month.
And I want to add something. What you were talking about collections, right? Um, Collections are calculated on your FICO score up to 7 years. So it's like a bankruptcy. So if you have it there for 5 years, it's still going to hurt your credit. Another thing that a lot of people don't know about collections, even if you pay the collection off, it's still going to look bad. It's still going to calculate as a collection. A lot of people think, well, I get called from the collection agency to pay off. They negotiate the debt, right? And if you negotiate the debt and you end up paying it off, it's still going to say zero balance with collection. Actually, right now before this call, I had a mortgage broker send me a file, and the difference between them getting a prime rate, and they're like a 660, but they need a 740, which you just mentioned, is that collection, and he paid it off. And it was a very high, it was like $14,000 collection. I saw a report that says zero balance. So what does that mean is that even if you pay it off, it's not coming off your credit report. Well, you still have to hire us to take it off. So I always tell people, if you're in collections, save your money. And this is me just overall. And one of the things I want to share why how collection agencies work. One of the things is, and everybody is listening, is when you get a loan from a private, from a bank, a credit card company, you have a contract with them. The moment they sell the debt, it's no longer a contract. That's why collections were able to remove them, because we know the law that protects the consumer, and that's why we're able to take them off even with $50,000 balance, because the contract was done with the bank or the credit card company. So that's something to note, because it's very important. People think like, when is this thing going to come off? Well, it's not. It's going to be there, and it's going to be calculating. It's going to hurt your FICO. So, just want to add to what you just said.
So technically, if you have an active collection, as long as it's not the same company that you signed the contract with, right?
Correct.
It can be possibly removed from the credit without doing a settlement, paying something to them.
Yes.
Oh,
Correct.
wow. So imagine, and trust me, some use services is one of the lowest one in the market that I know. And imagine that person that paid what, 14,000 versus giving a call first is non-brainer,
And they still have to hire us to take it off, because
to
they
pin
want
it.
the prime rate. Yeah. So I always tell people, and there's been times where I also, another thing that I come across is people that get into debt consolidation. I go, keep your money, because all you're doing is paying a monthly fee to a debt consolidation company, and they're still going to negotiate your debts, and they're still going to put you in collections, and you're still going to have to hire us to remove all the collections. So might as well just stop paying them. I tell the client, or just give me the money. I don't, I'll take your money, but just stop paying them and we'll take them off, because that's how it works. And the law states, there's laws that protect us as consumers, that states third-party collection agencies are not liable, you're not liable to pay a third-party collection agency, unless there is banks that will they'll hold the debt, take you to court. That's very different. But a collection agency can't sue you, because they bought the debt pennies on the dollar from the credit card company or the bank. So that's how it works. So they already got paid and they wrote off the rest. So now the law says, well, the collection agency, you don't have to pay it. That's right. That's why go ahead.
No, I do have a question. If they don't own the debt, how the law allow them to put on your credit?
Well, that's how it works. Is, so for example, they buy the debt, and the agreement is you got to put it on their credit, right? Because you got to ding it. The bank already put 90 days late or 120 late. So you have late payments with the bank, and now you're gonna have a collection. So now your FICO is gonna keep dropping. It's not gonna go up, because now you say it was a Chase credit card. Now you have 90-day late on a Chase credit card, right? Now the collection agency bought it. Now they're gonna put a collection. So one of the things is, and this is, I want to add to this, once we take a collection off, a lot of collection agencies, they own multiple collection agencies, and what they tend to do, and we're seeing it a lot right now, they re-add it to your credit. But you know why they re-add it? Because most credit repair companies will charge you again and take it off. We don't, because we know the game. So the second time we take it off, they won't add it, because it costs them money to add it, and it costs them money to fight us on a dispute. So at the end of the day, we win. But just it's a game, but we know the game. That's why we're able to take them off.
You guys are one step ahead.
Always.
That's good, man. Perfect. Now, what are the tips, for the people who wants to have a healthy credit? Okay, what are the tips, that you can give them? Like, for example, I know you mentioned one time to in one of the team meetings, make sure you tell your clients to keep, if they have whatever the limit is, keep it below 30%.
Mhm.
Why?
So that's okay. Yeah, that's a great question. So there's multiple factors. 35% of our credit is based on utilization. So the magic number is 30%. You think, okay, if a Chase gives me a $10,000 credit card, they want you to have it at $3,000 or less. Why? Because that's a rule of thumb. They have statistics that anything that goes over 30%, the default rate's higher. Right. So I always tell clients, if you want to use your credit card more, ask for limit increases. Right. So that way, when you get the limit increases, you're able to use your credit card more, and it keeps your utilization down. It's a game. Also, another trick to this, say you have two Chase credit cards, if say one has 10,000 and one has 20,000, you could call Chase and tell them to transfer $10,000 limit to this other card. Now you have $20,000 limit. Or you could tell them put $25,000. So say you have $20,000 on this card, tell them put 19,000 on this card and leave it at $1,000 limit. You could do that. So there's so many tricks to the trade that nobody teaches us, but that's how it works. So now you're able to transfer limits from one card to another, and that keeps your utilization.
Okay, perfect. What are the advice you can give to the audience right now that are watching, or probably they're gonna watch it later on YouTube, for them to have a good credit? And by the way, before you mention it, we're gonna have a webinar. So right now we're giving them the outside,
Yeah.
not exactly the main details. So right now it's an overview. And also, if you have any question, feel free to drop the questions. If we're able to read the question before we finish our live today, we're gonna be able to answer those questions. But we're gonna have a webinar. It's gonna be on Thursday, 2 weeks from now, exactly at 5:30 p.m. That one is not gonna be live, so it's gonna be exactly a Zoom link. So on that specific one, we're gonna be talking more in detail how to have a better credit, how to fix the credit, and whoever attend, we're gonna offer them free, not only free credit check, but free credit repair. And we're gonna mention the details on that specific webinar.
Got it. Done. Let's do it.
Okay. But yeah, what is the other advice you're going to give us?
Also, so the next thing is also understanding what you're using credit for, right? A lot of people get credit and don't understand why you want to use it. For example, you go to let's use Home Depot, for example. Home Depot does not report to all the bureaus, right? They only report to one, sometimes two. So you got to make sure if you want to establish strong credit, there's tiers in credit cards. I always tell clients there's tier ones, there's tier twos, there's tiers three. And it's very important to understand if you want to establish strong credit and be able to get approved with, top tier banks, which are US Bank, Chase, Navy Federal, which one am I missing? US Bank, Chase, Navy Federal. Those are the top three banks that you should apply for a credit card, even if they give you $1,000 limit, because those are top tier banks. When other banks see that you have those banks under your credit, they will definitely look to give you credit. Now, Capital One doesn't report to all bureaus. A lot of people think it, but they'll prove you, right? So you just got to make sure that you know how to mix the credit that you have with some top tier credit cards, because those are the ones that are going to open the floodgates to everything else you're trying to do. And believe it or not, but the system knows when you run credit and they see a Chase trade line in there. That's why when I offer trade lines, and I've done them to a few of your clients, you see the trade lines just make such a huge difference on their credit reports, because the banks look at it, the way they calculate a trade line that's a tier one, they boost their FICO up to 100, 150 points, right? Because they see that the value of those banks, it's valuable, and that's how they look at it.
For that, you say Chase. I'm taking notes, by the way, for myself. Chase, Navy Federal, and which was the third one?
US Bank. US Bank.
Okay, so don't go to well, you can go to Capital One, American Express, but make sure you go to Chase, Navy Federal, and US Bank first.
And Navy Federal is an invite only. So you want me to sponsor you? I could sponsor you. I'm part of Navy Federal. Okay. I'll sponsor you.
Sounds like a plan.
But you see what I'm saying is it's a game. Like, you got to understand the power of the game, and once you understand it, you're able to play the game, right? And you're able to get the credit that most people, like, I'll give you an example. I have two Bank of Americas with $35,000 each, right? And I called just for the hell of it, and I transferred 30,000 from other. I have a $65,000 personal credit card that's unheard of, because normally they stop you like at 35, right? But I merged them, and it worked. They're like, yeah, sure enough. I looked the next day, and it has $65,000 limit on it. But what I'm saying is, now, with that being said, it's a game. I could transfer I could transfer it back. I don't have a balance on neither. But what I'm saying is, that's how the game is played. Okay. You just play it. Yeah.
And one more tip I'm gonna give this, and this happened to my wife recently.
Yeah.
Do not close accounts, but people hear that a lot. Make sure you use your accounts. So my wife, she had a credit card, and she didn't use that specific credit card. And I don't know if she got a notification from a third party app, hey, your FICO score dropped a little bit. When we went and say that X account was closed, but because he never used it. So make sure that if you have a credit card, every now and then go put gas, even though you pay it off right away. But make sure you use the card because if not the creditor, they can close your account. But because whatever good history you have on that one, it's gonna be gone completely when that account is closed, even though you didn't request it. I'm correct or wrong?
That's a 1,000% right. Let me add something to that. So what happens, not only closing the account, so if you had 10-year history on that credit card, those 10-year history are gone. So your FICO is calculated on history. History is 25% of your FICO score. So if you had a card for 10 years and then you don't use it and they close it, they just took 10 years off the history of that credit card from your credit bureau, from your credit profile. So your FICO just drops just because of that. Another thing, inquiries. This is another thing that, giving tips. After you have 6 inquiries, you're not going to get approved no more. So after you run your credit 6 times for credit cards, you're not going to get approved no more. The banks will decline you, even with the 800 FICO. Why? Because that's a red flag. So I always tell my clients, we have a program where we do a credit card inquiry sweep. We'll sweep out all your inquiries so you could go apply again. Because after six inquiries, they're not going to approve you.
Okay.
And we take them off within 30 days. So they come off and then you go reapply.
Perfect. So you heard that's good advice. Now, going back to real estate. Okay. So a lot of people watch our channel because of real estate. When you're buying a house, this is the FICO scores that you need in order to buy a house. Okay. You can get an FHA loan as low as 580 FICO score. Okay. Yes, you can get a loan for a house as low as 580 FICO score. But keep in mind, most likely the down payment will be higher. Most likely also you're gonna need a higher down payment as well. Okay, interest rate will be higher and down payment will be higher. Okay, a lot of down payment assistance programs, you need a minimum of 660 FICO score. CalHAPA, I believe, is 640, if I'm not mistaken, 660. That's one of the biggest programs here in California for down payment assistance. So in programs for I-Teen loans that we have available, those are 660 FICO score as well. So keep that in mind. So if you want to apply for down payment assistance, the minimum FICO score is 660 average. Okay. Now, if you want to do a traditional loan with the lowest interest rate possible in today's market, make sure you have a FICO score above 720. Okay. And we're going to be doing, you mentioned something before we start the live that you can provide a link so that way they can check the credit. And we also in the webinar, we're going to do that for free as well. But you can text to the phone number on the screen, 562-448-6775. Text credit, and we can provide the link so you can check the credit. So make sure you check the credit. Okay. A lot of people don't run your credit with a lender. Check your credit before you go and apply for a loan. Now, if you don't have a good credit and you want to contact Caesar directly, even though you don't want to buy a house, you just want to have a good credit score. Caesar, what's your contact information?
Or just do me a favor. Could they just text you and then you just send them my way?
Okay, perfect. You can text the same number.
That way you take their information as well. So that way in the future, when they're ready to buy, they come back to you.
Okay, perfect. Sounds good. So if you don't want to buy a house or you have a house already, but you need credit repair, I will tell you this, Caesar is the best when it comes to credit. Okay.
Thank you.
And when it comes to the webinar that we're going to have, it's completely free, the webinar. Make sure you guys tune in. We're going to give you guys the main details, on the credit, the main details, how to check the credit. And, so that way you more savvy when it comes to that, because a lot of people open the credit, they see the FICO score and they're like, that's it. But we can tell you, hey, this is the way you're supposed to read it. What are the factors you need to see? And more important, right now we have for all the clients that want to buy a home, you can get free credit repair when buying a house. And we're going to mention more of that next Thursday, the 27th at 5:30 p.m. So make sure you guys text to this number, the word credit, so that we'll be able to send you the link and you're able to register. It's not going to be live. It's going to be through a Zoom meeting. Okay.
And then also, I want to share with you when I've been working directly with the credit bureaus, TransUnion, Equifax, and Experian, we're actually adding Vantage 4.0 to that free credit run. So you'll be able to run the credit for all your clients on a Vantage 4.0, which is the new, you're able to you can actually get a mortgage on a Vantage 4.0. So you'll be able to give free credit run on a Vantage 4.0 for your clients, and I'll give you access for that. We should be launching that next month. And this is the reason being is because right now 95% of our clients come through for real estate, refi or purchase. So the thing is, I realized the platform we use is Vantage 3.0. So it's a little it doesn't calculate the FICOs exactly like a mortgage FICO. So actually Vantage 4.0 just got approved by all the lenders to be able to use that as a credit. So now I'll be able to give you that link and you'll be able to check your client's credit for free that are trying to buy a home. Once you see that the FICOs are good enough, then you could just run it and now you have yourself and then for me it's going to work because I'll be able to give you a Vantage 4.0 updated credit report for all your clients.
Is that right? Perfect. So a lot of value for our clients, either credit repair or real estate. We're here to help you guys. Cesar, thank you so much for being on
Thank
today's
you. I
show.
appreciate it.
Appreciate
Thank
it
you.
for taking the time. And any questions, feel free to contact us. We can connect you directly with Cesar so they can help you with the credit repair. When it comes to buying, selling a home, or refinancing, make sure you give us a call as well. We are the number one option.